Thank you both for joining me. Sudeep, let me treat as they usually do. Okay, so what do you feel, Ashish? What's your sense? How are things looking on the charts, and what is this telling you?
See, overall, as it is rightly pointed out, there is a lot of liquidity that has been chasing, and if you look at Dow Jones Industrial Average on the charts as well, it formed a major low in 2008. So it was already in the bull trend, and the Brexit event came at the point when the markets were already moving higher. So the sentiments had been positive. So there was a lot of quantitative easing which was done in 2009, 10, 11, and that has led to the positivity in the sentiments, which is driving it right now on the higher side. So I would also say that it's not purely because of the fundamental reasons that the markets are moving higher, but it's more of the sentiments and liquidity that is playing it higher. And at the same time, Dow Jones have been moving higher. It's not only US markets, but even FTSE. If you look at the charts, on the Brexit day, FTSE did not make a fresh low, but instead it recovered back sharply after a few days and is trading at it's about to touch the previous highs as well. So all of these are indicating that it's more of liquidity driven and not about anything fundamental or rational that looks to me right now.
And are you seeing a direct correlation or almost direct correlation between what happens in the Dow Jones and let's say the BSE Sensex?
I would not say that the correlation is very, very strong, but definitely there is some kind of a positive correlation which we can see because when the US markets, Dow Jones, S&P are hitting lifetime highs, that sends across a signal that there is still a lot of liquidity which is driving them, and that liquidity can come to India as well. So it helps these sentiments, but definitely there is not one-on-one correlation which we can see, but definitely it helps the sentiments.
So we'll come to how this could be an opportunity. Foresee a trend reversal in turn because liquidity could get dried up or some other extraneous factors?
Yeah, see, the concerns still remain. One is that major tops in the markets are formed not because people start selling. It is formed because there is no one left to buy. So if there is no one left to buy, then the market suddenly starts reversing and falling very sharply. And what happens, people have a tendency of herding mentality that's normally followed in the markets. So when the prices were at lower levels just about a few months back, no one wanted to buy in equity markets. And now when it is reaching around 8,500, 8,800, everyone want to be a pie and of the growth story. So that is definitely concerning. And what concerns me more is that the inflation which was expected to pick up in the Eurozone, in US market has still not picked up. Many of the developed economies, if you check, are still exhibiting negative yields or almost zero yields. So those are also concerning signs. And at the same time, this time the rally which has happened because of the buying in the PSU banks. Now there is a very typical behavior. PSU banks have corrected sharply from their highs, and if you check 2008 highs are still very far away. And the bounce back which we are seeing is probably a retracement in PSU banking sector, metal sector, which was already oversold. And Brexit provided that trigger where people thought, okay, let's buy, and these are the sectors which were out of the flavor, suddenly became the theme of the market. So there is a retracement which is ongoing, and definitely there is a concern.
Okay. So Sudeep, if we were to see...
Yeah, so what I would suggest is that the euphoria right now which is ongoing is actually the best time, as rightly pointed out, because a lot of people try to put money during the euphoric times, and that helps IPO to even list at a very, very expensive pricing, so which helps the investors to get out. That's one. Secondly, a lot of things are changing. Definitely, one concerning point is that the FTSE has moved higher. However, you look at the other markets of the Eurozone, which is DAX, which is a Germany market, one of the strongest economy. That DAX index is still not filled in the gap during the Brexit event. If you look at CAC, it has still not filled in the gap. And the other major concern that everyone is ignoring is the sharp appreciation seen in GBP, in INR against GBP. So that sharp appreciation is going to hit anyone who has exposure to UK. So those currency appreciations, yield and the Eurozone are definitely concerned, but the buying opportunities will be there. Eventually, any correction will provide buying opportunity later.
Broadly, you're saying, do you agree with the window? I mean, is that
yes, yes, absolutely. So I think the liquidity might dry up suddenly over the period of next 2 weeks or 3 weeks, and the entire pattern we have seen is in an overlapping fashion, which is concerning. So if that happens, then we might see a very
short window. Therefore, we must move quickly, and that's